Thanks for joining us for the last session of the day. With me is Mike Praeger. Mike is the CEO of AvidXchange, which is a B2B payments company. Mike, for those in the room who might not be familiar with Avid, why don't you tell us a little bit about the business?
Yeah, great. Thanks, Peter. So AvidXchange, we're a software company headquartered in Charlotte, and we automate the accounts payable and payment process for typically middle market companies. So very simply, we eliminate the paper invoice from the accounts payable approval process, and we eliminate the paper check.
Now, in the consumer payments world, we have Venmo, we have Square Cash, we have Zelle. How is the paper-intensive factor of B2B payments compared to some of those consumer payment apps?
Yeah, so the really interesting thing is you think about the consumer payment process compared to the business-to-business process is kind of the process is the key piece. Businesses have business process in terms of how, first of all, it's typically invoice-based to initiate, or it could be purchase order based. And then there's a whole approval process. There's a coding process and how an invoice gets coded. And then once that happens, businesses make payments from an accounting system, not going to a third-party portal and logging on to make a payment. So there has to be deep integration to lots of accounting systems. And then once they manage their cash flow process within the accounting system, then that payment comes back to our platform and gets executed. So I think the big difference is we have to manage the business process, and then we have to integrate to lots of different systems to allow to really mirror how businesses want to manage this process.
When did you found the company again, remind me?
In April 2000. So
Okay.
I get introduced at a lot of conferences as a startup company in Charlotte, but
Right.
we've been at it for a while.
Okay. Has the B2B payments landscape changed much between 2000 and 2018?
It's interesting is there was maybe between 2000 and 2005, there's a kind of a cohort of companies in B2B payments that kind of got started. And there really hasn't been that much since. There's been a handful. And I think, part of the reason is it's really hard. And it's hard in a couple things. It's hard, one, getting customers because it's typically vertically market focused. And it's hard integrating to lots of different accounting systems. And so because of that, there's, you look at, kind of all of us that got started, it took a long time to get a customer base that had any significant size. And it also took a long time to get enough accounting system integrations to go after enough market, size to be able to grow to be a bigger company.
Why did you decide to tackle the problem of B2B payments? How did you get the idea for the business?
Yeah. Well, I got the idea of listening to a couple of real estate buddies of mine in Charlotte after I exited my previous software company, and they were complaining about the paper problem they had in accounts payable, and both of them are real estate companies, and they said, we can never find the one invoice that we want to find, that we want to research. We can never find that invoice. It's kind of a paper factory, and there has to be a better way. And my background has really been around, automating business processes. And I said, well, let me look at this. And kind of when I saw it, I'm like, man, this is ripe for automation. It's hard to believe at the time it was 2000, and all these companies were still primarily managing paper. And it's interesting, you dial forward now 18 years, we've made progress, but it's still, 60% of middle market companies predominantly still manage their process with paper.
Back in 2000, did you think we'd be sitting here in 18 years
No.
citing those stats?
I think we took a bet, a couple of us in the early days on, how long it would take before, just electronic invoice would become kind of the standard and the norm. And a couple of people said, well, it'll happen within 3 years. Somebody said 5 years, and I think the outlier was maybe like 7 years. And here we are, 18 years later, and still the majority of the industry operates with paper invoices.
And it sounds like you're saying the barrier to more digital payments in the B2B space is not necessarily technology, although you do have to integrate with all these different systems. It's more organizationally, changing workflows, stuff like that.
It's change management, Peter. I mean, it's, it's not, people have been paid for a long time, right? And so the payment process works. It's just, incredibly inefficient. And I think, one of the key kind of catalysts, I think, in terms of, some of the adoption, and this is kind of my hypothesis, is really, I call it the millennial effect, where now you have kind of younger people moving into leadership roles as chief financial officers, senior finance people, who spent their entire life personally paying all their bills electronically, and now they're like in the business world, and they're like, why are we managing all these paper checks when I haven't, done that in my personal life? And I think that catalyst has actually been one of the, the things that's really driven it forward in the last, call it, probably 3-5 years. And we certainly see, a continued uptick of probably about a 10% conversion rate from paper to electronic happening each year.
Now, it seems like the venture capital market has discovered B2B payments. I know you guys raised a big round last year. Early on in your history, did you, in the early 2000s, did you pitch VC firms then? Did you get a very different response than today?
Yeah, so yes, we got a very different response. So first of all, we got started in April 2000. So we all know what kind of, kind of the, summer 2000 was like trying to raise capital and kind of, the rest of the year. So we raised only, around $4 million in our first year or two of existence, and then we went 10 years without raising any capital. And it was just focused on kind of, one, figuring out the business, figuring out the market that we're in, building the value proposition. And then it wasn't really until 2012 timeframe when we added payment to our platform to really manage the entire accounts payable through the execution of payment process, that our growth rate went from 15-20% a year to north of 40%. And we've been growing at north of 40% since.
So outside from your own experience with the company, were there market factors that you think kind of turned venture capitalists on the opportunity in payments or B2B payments specifically?
I think certainly the initial entree was on the consumer side, and I think one, it took a long time for companies that are like AvidXchange in the B2B side to get any scale. So you ended up, for a long time having just a lot of really small companies. And I think, the reason why it takes scale is CFOs don't make decisions overnight in terms of changing key back office processes. So it just takes a long time to get a scale of customers. And now you have kind of a cohort of those that got started in the 2000 timeframe that are now 18 years into it. And now some of us are starting to get scale.
Now, yesterday, PayPal bought a B2B payments company, right? And Stripe has raised a lot of money in that world too. Square is moving, more online. Other than those companies, is there a reason why, big incumbents in payments technology have kind of ignored B2B for so long?
Yeah, I think it's a good question. I think we're seeing, some of the, kind of incumbents, kind of around the edges. And the interesting things about it is a lot of them are actually looking to kind of get into B2B payments through kind of partnerships and kind of strategic partnerships because they recognize, hey, B2B payments, especially when you get above small business, is really kind of a different animal. And maybe we should execute it with somebody who kind of figured out that market segment rather than us, do the brain damage of trying to reinvent that segment.
Now, last year you guys raised, I believe, $300 million,
Correct.
From a group of folks, including MasterCard and Peter Thiel.
Yep.
So that's a pretty big round, even in Fintech. What are kind of you been using those proceeds for since then?
Yeah, so one of the catalyst for that round was our strategic commercial agreement with MasterCard, in which we became their B2B payment platform for the middle market, defined as really companies between 5 million and 1 billion of revenue. And so as part of that, we ended up raising that $300 million round, largely between MasterCard, CDPQ, Casa de Po from Canada, and Temasek from Singapore. And one of the things that we probably didn't recognize at the time is to be, MasterCard's partner and have them white label our platform, what that really meant from a redundancy, service level, security, all those type of things. And so I think we had to kind of probably grow up really quickly as a company related to scalability, infrastructure, and just being industrial strength that we probably didn't, really appreciate at the time. So we spent a lot of the last year, investing heavily in our platform for all those reasons. And, pretty excited. Fifth Third is going to be one of the first customers on our joint platform with MasterCard to go live in the next couple weeks.
So those are some lessons you've learned, I guess, post-deal with MasterCard.
Right.
I know a lot of folks here are probably hoping to sign a big agreement with a card network like MasterCard or another big financial institution. you have advice for them on how that process goes and how to be more successful?
Yeah, I mean, well, first of all, I think, it was the whole discussion with MasterCard on this relationship, took about 18 months. And at the time when we initiated it, we were talking about launching like 6 months into it. That was the discussion with MasterCard, and we're going to launch this, partnership in 6 months, and it took us 18 months to actually put together the agreement and the framework for the relationship. So one, it takes probably a lot longer than you'd hope to take. And then I think, at least for us, we didn't really kind of appreciate kind of what, how much investment we'd have to make just infrastructure-wise to meet all the requirements that MasterCard had in terms of for them to put their name on, on our product. Now, it may be different, certainly if you're like a referral partner and, somebody's referring you customers and you're operating, more or less like you used to operate. But when somebody like MasterCard puts their name on your platform, it kind of changed the game in terms of, from a service level perspective that we had to meet, which was a different level than we had with our customers previously.
So you're now probably one of the best capitalized firms in the space. How fragmented would you say the B2B payments market is today, and do you kind of see a use case for using some of those proceeds for M&A?
Absolutely. I mean, I think that was the catalyst on why we ended up raising as much as we did. We think there's going to be increased opportunities for M&A. We bought a company, a software company, Ariat Software up in Boston last November. That gave us some product capabilities around adding purchasing procurement to our platform. But one of the things that we really, I think there's going to be big opportunities for is in other different vertical markets. In the middle market, companies don't wake up and think of themselves as a middle market company. They wake up and say, hey, I'm a real estate company in multifamily, or I'm a healthcare, long-term care facility company. And that's how they think of themselves. They think of themselves in vertical markets. And organically developing vertical markets is really hard to do. Mm-hmm. So we think for new vertical markets, finding companies that have concentration of customers are great tuck-in type acquisitions that we can leverage those customer relationships that they built.
Mm-hmm. Are there any particular verticals where AvidXchange has a pretty concentrated presence? Or you?
Yeah, I mean we really dominate real estate, the homeowner association, HOA market, construction, having growing presence in medical facilities, the education market are some examples, and nonprofit. And there's quite a few more verticals that we'd love to be in, whether it be organically or through M&A.
Now, we've been talking a lot about the private fundraising market. In terms of the public markets, we've had some pretty big IPOs in the fintech world between Adyen and GreenSky recently. Yep. Do you think Avid makes sense as a public company, and what are some of the things in the market that you think will be good signals for informing your timing?
Yeah, certainly we think that's one of the most logical liquidity outcomes for our investors is to be a public company. And I think we're building the company in a way that'll be an option for us. And it probably starts with the people. So just in the last 18 months, brought in Joe Wilhite as a public company CFO, hired Steve Bohm from eBay as our chief operating officer, Dan Dries from Capital One and Fiserv as our chief revenue officer. All examples in terms of, I think, getting the business as, to have that be an option when we think that the time is right.
Now, one thing I wanted to ask you about is blockchain, which has been mentioned a lot at this conference.
Yes.
And you guys have been around for a long time before blockchain was even a popular word. But yep. Do you see any potential for blockchain to change your business processes, your technology going forward? And is that something you're working on at all actively now?
Yeah, so I get asked that question a lot. And what we think is, so we like to focus our own product development efforts into how we I guess, interface with our customers in terms of what the business process is and the interface and how they interact with our software. We think of blockchain more as kind of an infrastructure, foundational layer technology. We think it has great use cases around security and storage as an example. And so we're actually working with kind of some of our kind of infrastructure partners like MasterCard, like Microsoft, and some of our bank partners as an example in terms of how it can be, leverages some of that, kind of foundational layer technology, and think it was probably something that we, more or less execute with partners rather than, AvidXchange going off and, developing our own, blockchain-related, functionality or technology.
Don't need to issue your own coin, no.
Yeah, no plans to do that.
Now you mentioned you're based in Charlotte.
We are.
And pretty big presence there, it sounds like. What is the Charlotte fintech scene like?
Yeah. So we're the largest software company in Charlotte, so we kind of like being big fish in a smaller pond. And so we've kind of taken a leadership role in the community around advancing fintech. We're part of, founding member of, we call Pay CLT for Pay Charlotte, and some of the other fintech. We just hosted in our office the Southeast Annual Fintech Conference last week in Charlotte. And I think, Charlotte's a unique ecosystem there's a lot of talent in the market. A lot of it is brought in by the banks and the banks that are in the market. And that talent then ends up spawning additional kind of innovation around fintech. And so we hope to bring some of that kind of entrepreneurial infrastructure and spirit to marry the two together. And we think we're already seeing kind of early stages of more startup companies being fostered in Charlotte because of that.
We're almost out of time, but for those founders in the audience who are not based in the Valley or New York, do you have any advice on tackling fundraising, tackling recruiting if you're in a city that probably isn't known first as a fintech or venture hub? Yeah.
So I think one of the things that probably everybody in my position is struggling with is talent. I think the companies that are going to be successful, whether it be in fintech or other sectors, are going to be the companies that kind of win the war on talent and have the best talent. And that's something that we're very focused on. And as we've kind of evolved from being a much smaller company now, having over 1,200 employees, I probably spend half my time on talent and specifically, what are we doing to recruit, the best talent and key leadership roles across the business. And so kind of in the early days, I was spending a lot of time trying to convince customers, to be part of AvidXchange, and now it's kind of migrated to convincing, talent to be part of AvidXchange. So I guess the lesson learned is you're always selling, it's just who you're selling to changes.
Okay. Well, I think we're out of time. We won't keep you guys from happy hour any longer. Please join me in giving a hand to Mike Praeger.
Thanks, Peter.
Thanks.